ICICI Bank has made a big move. Starting August 2025, customers opening accounts in metro and urban branches will now have to maintain a minimum average balance MAB of 50,000 rupees. That's a steep jump from the earlier requirement of 10,000 rupees. The changes don't stop there. For semi urban branches, the minimum balance has risen from 5,000 rupees to 25,000 rupees. In rural branches, it has gone from 2,500 rupees to 10,000 rupees. MAB is the average amount a customer needs to maintain in their account every month. If this balance drops below the limit, a penalty is charged. ICICI Bank has also clarified the penalty structure. If a customer fails to maintain the required balance, the bank will charge a penalty of 6% of the shortfall amount or 500 rupees, whichever is lower. This makes ICICI Bank the first private or public sector bank to introduce such a steep hike in minimum balance requirements. Meanwhile, public sector banks are moving in the opposite direction. Last week, the Finance Ministry told Parliament that state run banks collected nearly 9,000 crore rupees in penalties over 5 years just from customers failing to maintain minimum balances. In response, many PSBs have now scrapped these charges altogether. According to Minister of State for Finance Pankaj Chaudhary, public sector banks collected 8,932.98 crore rupees in non-MAB penalties between 2020 to 2021 and 2024 to 2025. Several banks, including Union Bank of India, Canara Bank, Bank of Baroda, Punjab National Bank, Indian Bank, Bank of India, and Central Bank of India, have now stopped imposing these charges in the current quarter. State Bank of India, the country's largest lender, has not levied such penalties since March 2020. That's not all. ICICI Bank has also updated its cash deposit rules. 3 cash transactions per month will be complimentary. After that, customers will be charged 150 rupees per transaction. The free monthly deposit limit is 1 lakh rupees cumulative. Once that is crossed, the charge will be 3.5 rupees per 1000 rupees or 150 rupees, whichever is higher. If both the transaction count and value limit are breached in the same deposit, the higher charge between the two will apply. Other charges to note are third party cash deposits will have a limit of 25,000 rupees per transaction for all savings accounts. For check returns outward, when a check deposited by a customer bounces, the charge will be 200 rupees per instance. For check returns inward, when a check issued by the customer bounces, the charge will be 500 rupees per instance.